Time for the call of the day. U.S. Steel missing the mark today. That is as Credit Suisse downgraded the stock from a neutral to an underperform. The firm warning of competition increasing and a sheet tsunami ahead. Those are the words of the bank. The stock tanking 10%, having its worst day since the beginning of August. Shares are down a whopping 50% from their highs. So how much worse could it get for U.S. Steel? By the way, we saw all the steel stocks across the board, AK, Nucor, Steel Dynamics, all down because the broader call is that there's going to be a ramp in production for these hot rolled coil sheets.
Ramp in production, and certainly if you look at HRC prices, 6 months ago they were near all-time highs. So the fortunes for the entire industry have changed. By the way, coincidence that this is really when the steel tariff discussion started happening, really March of last year. These companies were in a very different place, 46 bucks on U.S. Steel. Look, I give Credit Suisse credit for getting out there on an aggressive call because at 13 bucks a share, JP Morgan's at $31 a share. And there's an argument here that despite what's going on and we had fresh talk of auto tariffs possibly coming in, the reality is that the capacity utilization in the sector is actually pretty darn healthy. Prices are pretty darn healthy. But the argument here is that there's going to be a flood of steel coming onto the market, and that's fair. Certainly we can see prices overshoot. I like the stock. I'm long the stock probably 25% higher, and I think it's interesting to own it here.
So you're not concerned about the capacity utilization? I mean, to me, this is like, for a cyclical capacity utilization, you just got to price it to your variable cost, and that's when you really see a bear.
Look, if these guys earn $1.5 billion in EBITDA, Credit Suisse says they're going to earn about $1 billion. So, I mean, again, there's disparity out there. On valuation, EV/EBITDA, this is a stock that I think somewhere around 3.5 times now looks very attractive.
Even if you believe there's going to be a production, a glut, or a lot of supply coming onto the market, what happens when all the tariffs are lifted? Let's say that day comes, but you still have this glut. What happens to these stocks?
Look, to me, tariffs are not a good thing. And we've seen this. We saw this with the Bush tariffs. We've seen this. I mean, it's been a death knell for steel companies. We have to get rid of them. They will trade better.
Off and,
it's in the price. Yes. I believe a normalized steel market, which is one where Korea could be dumping steel and China could be dumping steel, is something that U.S. Steel was dealing with at 45 bucks a share.
What I don't like is the situation where we're sitting here and we're talking about the idea that, potentially this could happen, because what we're seeing in front of us is exactly what's happening. We're talking about potential glut, right? I mean, we're talking about so I'd rather stay away from that right now. I think there are other places in the metals space that I like a little bit better right now. Timmy, I know, has been around copper forever. Mm-hmm. Freeport today had some huge call buying going on in there. I jumped in that towards the end of the day. I'd rather be in those names than the steel names, though, right now, Mel, just because of how I see things going on, whether it's tariffs or this glut that we're seeing coming on the market.
All right.